Hey, Renter Retires, it's Adam Schroeder here with another episode, joined once again by the founder and CEO of Renter Retirement, Zach Lemaster. And today we're going to talk about an aspect of real estate that I have not currently dove into. I know Zach has in his journey, and that is short-term rentals. Sorry about that, not rentals. And we are joined today by Erica Muller. She is a real estate investor herself, and she founded and is currently the CEO of her company, Virilio, which helps people find short-term rental properties. So, Erica, welcome to the show.
Thanks so much for having me. It's a pleasure to be here, guys.
Absolutely. So tell us a little bit about your real estate journey and kind of how you got into real estate in general and then short-term rental specifically, and then kind of what on earth you decided to create after you got into that space.
Yeah, so my journey is kind of interesting. I got into real estate when I was 18 years old, straight out of high school. I got licensed. That was 21 years ago. So I started immediately in commercial real estate. My dad had some friends in commercial real estate, and they were kind enough to take me under their wing, teach me the ropes. And when I was 21, I started my own real estate company. So from that time on, I only worked with real estate investors since day one. And started building my own portfolio at that time as well. And I did that up until the crash of 2007. It was around that time where everything started crashing. And, nobody was kind of special at that time. Everybody lost everything. And I was included. I lost all my houses. I lost everything. I didn't have a real estate business to keep going because nobody could buy anything anymore. So it was a really humbling time. And I'm really glad it happened to me at such a young age because I was still young enough to bounce back and reinvent myself in my career. So, and at the time I ended up moving to Orlando where there was a bit more opportunity to take on different roles in real estate that weren't sales. And I took a position as a short-term rental sales director for a management company in Kissimmee, Florida. And that's how I got introduced to short-term rentals. And this was in 2007, 2008. I quit that position after 2 months because I saw there was so much money getting poured into the country, especially Florida, from overseas at a time when nobody could buy anything. I mean, U.S. domestic investors, we didn't have money. We didn't have anything. So if you weren't working with international investors, you weren't making money at the time. So I quickly focused on that and discovered that short-term rentals were a really hot investment, and I'd never heard of them before. There was no Airbnb. All there was a VRBO at the time. And this was so popular outside of the US. Everybody came here to Florida and stayed in these short-term rentals, except for locals. Nobody used them here. Everybody still stayed at hotels. So I was really ahead of this long before I think any real estate agents were even involved in it. And because of my commercial background, after about 6 months of doing this, I started building some really complex financial models around it that allowed me to take on bigger clients like large funds from Brazil and other countries that were pouring a lot of money at one time into this market in Orlando. So I built those models. I worked with these funds. I worked with investors from all over the world. And I did that till about 2017. And I was like, this is great. There's amazing money in this. And, it's starting to get more mainstream now. It's starting to become a product here in the US with Airbnb getting traction. But this isn't scalable without technology as far as investing goes. So what I did was I wanted to build the first short-term rental marketplace that existed, like a Zillow for short-term rentals. So I took my own capital and I invested in a technology project. I didn't have a technology background, but I quickly learned after, losing money and burning money on how to do it. And I finally got a marketplace off the ground in 2019, the very beginning of 2019. And to date, we've closed over $60 million in sales volume off that platform. It functions like a Zillow. There's off-market deals of short-term rentals from all over the world on there. But most importantly from that, and I'm going to wrap it up real quick because I know I don't have any more time. Most importantly from that, we built an unbelievable data tool that basically goes 10 times deeper than any public-facing tool on the market because we found there was a huge hole still in the data. So we pulled all that together, and here we are today.
That's outstanding. Erica, we're super excited to have you on here because short-term rentals are a space that we get asked about constantly on a daily basis, and it's a very intriguing asset class. There's also a lot to it. It's much more involved than, say, just evaluating your long-term rental. I mean, from a managerial aspect, from, all the different options on like how you're going to set that property up to be a unique experience. And I mean, short-term rentals, what I found in my personal experience is just that the one property could have a dramatic difference in income and the potential with that based on how you manage it, how you're advertising. It's just a whole different game. But one thing is just so important, and that is looking at metrics and data. And when we talk about like what is Virilio, and I'd like to hear your opinion on this, I think that's a good analogy of Virilio being like the Zillow for short-term rentals, but I think that's actually an understatement because of all the information that you're providing to investors. Essentially, though, you're allowing investors based on their investment criteria to identify the markets and actual properties that could perform well as a short-term rental. Did I do that justice in terms of the explanation?
Yeah, that's exactly right. Short-term rentals are a completely different animal than everything else. And they really need to be recognized as their own asset class at this point, if they're not already. I think just this year, appraisers are finally starting to approach them differently from an appraisal perspective. In the last 2 years, we've seen more mortgage companies creating products around specifically short-term rentals. So they've really gained a lot of traction since then, and they definitely need to be approached differently. And data is key to really getting it right with these.
Yeah, that's one thing we haven't talked much about. When you say mortgage companies are developing packages around it, just can you dive in real quick about how what that means? Like, why is it more difficult? What do you have to do to show that, this property is something that they should, underwrite?
Right. So just like on traditional investment property loans, we could get away with showing a trailing 24 to the lender, and they would see there's history there and we can prove that. But on a short-term rental, there were very few lenders that would even touch short-term rental history because it was so variable. It could be up, it could be down. They didn't have algorithms that could explain why it was going up and down. There was no price optimization software yet. So what that looks like now with the advances in price optimization software in short-term rentals, as well as the availability of data tools, is that more lenders are comfortable now taking the rental history from these short-term rentals and using it as a basis to lend on it. And two, they're even building products around that with only 10% down, where traditionally investment property loans were at 20%. So it's come a long way in the last 2 years. I mean, you couldn't touch those kind of loans 3 years ago.
I was blown away when you showed me the software and kind of ran through like my buying criteria, for example, and anticipated return on investment, price point. Like some of the return on investment that you can achieve just based on using the right data is just astonishing. It's crazy. I mean, we'll go through a case study, and if anyone's listening to this on the podcast, you need to jump on the YouTube channel and actually go through this so you can see the case study and see Erica go through this live. As an example, maybe we'll use Adam's buying criteria for short-term rentals to get him into his first one. But yeah, it's so essential to just have good data and information because it's less readily available than I would say long-term rentals or other asset classes. And there can be a lot of variability in that. And you need to look at other assets, right, in the area, how they're performing, historical data. There's just a lot of information to go into it. So do you think this is a good segment to actually go through and showcase the software that you've been, adamantly building over many years here?
Yeah, and I just want to quickly, before we jump right into it, explain that it's really important to know what you don't know when it comes to approaching data. Because if you don't know what you don't know, you're going to think that bad data is good data. And you're going to form a basis of your investment around that. So there still needs to be some responsibility for the investor to learn what is good data and what is bad data. And should I be looking at this and should I not be looking at this, or what's it missing? And I'm not saying everyone has to become a data scientist, but just a little basis of knowledge to know what you don't know is really going to be helpful because there's so many new tools popping up every day that even I get confused sometimes on, what's everybody doing out there?
Can you also just briefly, before we go through this example, like what does Virilio do for clients? If you could just summarize this in a quick elevator pitch or something, what are you doing for investors?
Yeah, so we consult with investors using our world-class data tools to help them identify where in the country is the best place to put their money in a short-term rental. And then we connect them with the absolute top-of-the-line agent that specializes in short-term rentals in that market that has a golden Rolodex of all the contacts they would need. So we save them months of time of having to look for data, quantify data, build performas, then try to figure out like comparing them all, and then try to find the agent, find the manager. We take all that out and we just go from A to Z with them. We can do that in 30 minutes.
Now, you're obviously targeting the real ones. Can you make short-term rentals work in any market, or does it do you have to really, obviously there's better returns in some markets. Will they work in any market, or does it have to have a specific attribute to it?
So if the tourism demand is there and the regulations allow it, it can work. There's a formula to how to make it work in each market, very different in each market. And we can talk about that in the data. But as long as it's regulatory friendly and as long as there is a demand there, there's no reason why it won't work.
And Adam, you'll be surprised here when we look at maybe some Midwestern areas that you wouldn't necessarily think as a traditional short-term market, but there's huge opportunity there. Whatever the driving market is, college towns, and a lot of this isn't theoretical. This is all data that Erica's gathered. That kind of blew me away. But also I want to touch on the point, Erica, that you're not just putting people in touch. Like, okay, so you build out a profile for someone based on their buying criteria, price points, return on investment, whatever other criteria they have, identify different markets and potentially specific properties within those markets that fit that criteria, put them in touch with the local team and agents and property managers to handle that on a short-term basis. But this isn't just anybody, right? Like, you have a pretty extreme vetting process for the agents that are working with you. They have to have experience. That's pretty important, right?
Yeah, it's super important. Part of my background too is I created the very first certification program for real estate agents to sell short-term rentals. So I have such a high standard that 95% of the agents that apply to work with our investors, they don't make the cut. And we do help them get there eventually with training and tools and, proven systems. But most agents don't make the cut. We have a strong vetting process. They have to have deep knowledge on financial models. They have to have a deep knowledge of their own market. What drives short-term rentals to their market, the different management strategies that are working in their market. And then they also have to be willing to work with data. And they have to understand how to work with data. And a lot of times we do help them with that in the beginning, because this is a new thing for salespeople, is having to work with data in real estate. So there is a bit of a training process. But I can say that the agents we use are so dedicated, so knowledgeable, and of the highest level, or we wouldn't be working with them. I would trust them with my own investments.
I think I'd be less surprised than you think, Zach, because I live very close to Fredericksburg, Texas, where there's nothing there, but the short-term rental market there is incredibly strong. So
it's interesting. This is some areas that you wouldn't even think about are just blown up as short-term rental, and whether it's traveling nurses or whatever the case is. There's just this huge market, but you got to look at the data, because otherwise it's like you don't know. Same thing for us when we're evaluating areas as long-term rentals. I would say there's even just an immense amount of more data specifically with a market and performing assets that you need to evaluate on a short-term basis. I was blown away again when Eric and I went through my buying criteria, but valuable tools, absolutely, to allow you to make educated and informed decisions on what locations to invest in and be set up with a team. I wouldn't necessarily say this is truly all, fully comprehensive turnkey, but it's getting pretty close to turnkey in the short-term space, where Erica's pulled together all the data, put together all the teams in place, and really put you in a good position to be successful, specifically in the short-term space. So as she mentioned, a lot of due diligence that you still have to go through, but this is a great starting point and allows you to learn a lot along the way. So let's get into your actual platform here.
Okay, cool. So let's do it. So this is our back end tool that we use. This isn't a pretty front end tool. We're actually querying straight from our database right now. That's why it looks kind of plain. But we have 5 different ways we can approach data. We have our market report, which is going to show you an entire analysis of an entire market with a lot of granular detail. Market comparison, which is going to allow us to search the whole country by cap rate and show us what to buy. Market match, which is going to be able to send you to the exact properties you want to buy based on your cash on cash return goals. And then we underwrite individual properties. And we even have a data accountability here where you can see the quality of data in each market. So what we're going to start with is just throw a market at me, guys. It doesn't matter to me where it's at.
What do you think, Adam? I kind of want to do like a non-traditional short-term space, like Kansas City or something like this.
Okay. So Kansas City, Let's see. Kansas City.
Let's
Here
do
we go.
Missouri. Let's do the Missouri
Okay.
side because we're
All
more
right.
active on the Missouri side. Yeah.
Yeah. Go to Missouri. Now, one of the things about our data that's very different than others is we don't blend condo, townhome, and single family, as well as other types of short-term rentals, because it skews the data. So those are all separated, so we can get the most accurate report. Can you tell me if you'd like to look at condo, townhome, or single family?
Let's do single family because I almost want to do a little bit of comparison here versus the long-term rentals that we see.
Okay, yeah. And that's another thing we want to pull in the next few months, is kind of pulling in the long-term rental data as well, so you can see if this doesn't work out as a short-term rental or something happened, can it still hold its own as a long-term rental and cover your debt? Okay, so Kansas City, Missouri, single-family homes. The very first way we approach this is what I like to look at first is our inventory and cost analysis. And again, we're blending short-term rental data with MLS data, so it's a completely different product than any of the public-facing tools. We can break it down by bedroom size, average sale price, and market saturation immediately. So competition and saturation is a big problem with short-term rentals. And one of the pain points we address here is the market saturation by bedroom size. So what we're looking at here is, of all the bedrooms in Kansas City, Missouri, for single family that we have enough data to report on, it looks like the most saturated of all of them are the 3 bedrooms, right? And then the 2 bedrooms shortly following that. If you want to be in the minority of bedroom sizes and not have as much competition, you're looking at a 1 bedroom, a 4 bedroom, a 5 bedroom, or a 6. You could go into a 7 or above. There's just not a lot of data there for those because there's hardly any. So that's one thing to look at first, is the market saturation. And then we say, like, what's the price to get into that on average, right? So we could break that down, and then we can come over here and see how many you can sleep. There's a ton of data points. It'll take me an hour to go through it, so I'm going to try to jump to the most important stuff. One thing here that is, we note as well, the likelihood of having an HOA based on how many in that bedroom size actually have one, because some investors just hate HOAs and it cuts into their expense column. So after we look at our inventory and cost analysis, we've learned here that the 2 and 3 bedrooms are the most saturated in this market. We can come down here and see on a performance analysis, like, how are these houses performing on a cap rate basis? Over here on the right is our cap rate basis that we can look at. And if it says NA, it means we just don't have enough of a sample size to report that data. So we don't report it because we're not going to give you information that's inaccurate. But we do have enough data for the 2, 3, 4, 5, and 6 bedrooms. And it looks like the 2 bedroom outperforms everything here in Kansas City. So I'm seeing a 5.7 to 6.62% cap rate, which is putting your NOI range around $9,000 to $10,000 per year, with a price tag of $159,000. So, I don't know what your criteria is, guys, that you buy at. I don't know if a 6 cap's acceptable or not to you. But if you were going into this market, here's your chance to do the best you can do. Now, this is an average, right? That means that there's some performing better and some performing worse. But on average, this is how the 2 bedrooms are performing. We also
that's interesting, because you would think, at least I would, in terms of short term, like, hey, let's get the biggest house possible, sleep the most people, and or at least have 3 to 4 bedrooms. Numbers don't necessarily agree with that.
No, that's not a solid strategy. You can't take that concept and apply it to every market. We can show you the markets where that works, but usually it doesn't work in every market. Most markets that we're seeing do really well are actually under 5 bedrooms, under 4 sometimes. And the price tags right now are under 300,000 or 400,000. So, we'll go into a little more of that in market comparison and dig into those numbers. But
can you scroll up a little bit?
Yeah.
Because one of the things that cracked me up is on the top amenities, you put the 2 bedroom hair dryer.
Yeah.
As a top amenity. Is that actually a thing?
Yes, it is. So you'd be surprised how many short-term rentals are not well stocked with those basic things like hangers, hair dryers. And you have a lot of people that, they're driving to that destination for a reason. They're staying. They need to be there for a night or 2. They need to go to an appointment, an interview. We don't know all the reasons why, but hair dryer matters because it's showing up here. What we look for in the data, and we can break it down in some of those amenity analysis later, is what is the most common thing and the most popular features like that in the top percentile, because that really tells us how important it is. And we haven't got there yet.
That shows me the level of detail, right?
Yeah.
I mean, if you're looking at the amenities as part of the house, that also gives you some idea of this is how to make your house perform to the top of the market, right?
Yes. like little things that you just would never think of that the data tells us. So we can even look here on the amenities and feature analysis and see that, pet friendly homes, the 1 bedrooms and the 2 bedrooms are the most pet friendly properties that are out there right now. And what we saw over here was that the 2 bedrooms are performing the best and they are the most pet friendly. So there could be a link between buying a property that's pet friendly and then also having a high performer, because a lot of people travel with their pets and a lot of short-term rental owners don't want to let them in. And I'm going to say something right now that might offend some people, so try to take it with a grain of salt. But I've heard from many short-term rental owners over and over again that pets make do much less damage to their property than little kids do. So if you're letting kids stay in your property, allowing pets, if it's more profitable as a feature, is a smart step for you to do if it shows in the data that it could increase your income. So we have here the scatter plot that breaks down our percentile analysis, and we're just data nerds, so we like scatter plots. This is not something that I think, a lot of people on this call are going to be super interested in right now, but we'll look at kind of what that says. So we don't have a lot of data for the entire market on top performers. We really only have single families here. So what that's telling me is that single families alone are the top performers in Kansas City. And so we kind of want to focus just on the single families in Kansas City. And the top performers in Kansas City are hitting about a 7 to 8 cap. So the price tag, and this strategy right here is what you were just talking about. This is like your duplicatable strategy for what the current top performers are doing, just on a fact basis. And then there's stories we can go into, the right real estate agent can help you make sense of that. And then also looking deeper. But right now, the top 20% of earners in Kansas City, Missouri, you're paying about $429,000 to duplicate those exact homes right now. And they're bringing in an average gross revenue of $74,000 with a nightly rate of $255. So what I see here too is that the average bedrooms on those are 4, and the average bathroom is 2, almost 3. So a 4-3. It's got about 5 to 6 beds, and it's sleeping about 10 people. So if I want to duplicate this strategy, that's going to get me about a 7 to 8 cap. If I want to do better than that, I need to buy at a lower rate and rent at a higher rate. But let's just say I'm going to duplicate this exact one. My property is a single family home around $430,000 with 4 bedrooms, 3 bathrooms that can sleep 10 people. And I'll be occupied about 80% of the time if I can hit those metrics that we're hitting here.
So why is it that I would think that the 2 bedrooms would have the highest cap because of what you were talking about earlier, but based on this, it looks like the highest cap is 4 bedrooms. So what causes that discrepancy?
Yeah, so this is on average, right? So if we're looking at the whole thing on average, we're seeing the 2 bedrooms are performing better, most likely because of the sale price, right? They're only at $159,000 and they're pulling in around $86 a night. So on average, they're going to perform the best as the whole market combined. If we isolate everything and we come down here to only the top earners, and we only look at the top 20% of all of them for the whole market, it's actually closer to 4 bedrooms that are doing that. I couldn't tell you why there's more top performing 4 bedrooms in the top percentile. That would be a local agent's job because we have no way of knowing that in the data. But what we know is that when you isolate it and you don't pull them all together, we can pull out that it's more 4 bedrooms. So that's why, too, it's so important to look at this on a percentile basis and not just blend everything together from the whole market. It's great to see as a starting point.
Yeah, this is just crucial stuff and probably more data than most people are even going to know what to do with. But I think it's important to have this data and also to be working with someone that can explain this and walk through this with you and help you build out a plan.
Yes.
Is really what it comes down to, and identify a market and a property that's going to set you up for success, or at least a starting point.
That average length of stays, that's incredible. I would not expect it to be
Adam
anywhere
really
near
get into the numbers here. Let's go through, and actually, since Adam is interested in this, I want to switch gears. Unless there's other specific data points on this report, Erica, that you want to go through, I want to showcase another thing that you kind of walk through. Like the average person, let's say they come to you with a criteria. So we'll go through Adam's criteria. Let's say he wants, I'll let him say, but say $300,000 price point, and he wants a 18% return on investment or something like that. I mean, let's kind of stretch the envelope a little bit here to show people what options there are.
So oh, sorry, go ahead.
Yeah, but Adam, I'm going to actually let you go through what criteria you would put in here.
Adam,
Yeah.
before you do, can I ask you the questions? Tell you, okay, so we don't actually
Sure.
ask for the return. What we would want to know from you is how much do you have as a down payment or as in total that you want to pay cash? And also how much do you want to put in your pocket at the end of the year after your mortgage and expenses are paid? Those are really the only two questions.
I think right now we'd be willing to invest maybe 75 grand.
Mm-hmm.
And annual cash flow, I have absolutely no idea. I
Okay,
know next to nothing about the short-term rental market.
So would you be happy to put 10 grand a year in your pocket?
Yeah,
From that?
that'd be fine.
Yeah, so it's super low. Let's say 20. Let's just say $20,000 a year.
Which would
on a
be about
75,000.
that's above a 20% return on investment, by the way.
Let's challenge
Yeah,
and see if we
that's
can
what
find it.
okay, the
If it doesn't exist,
26%.
yeah, if it doesn't exist, nothing will show up. If it exists, we will absolutely find it and tell you where to go. Before I do that, and I'm assuming you're leveraging about 80% debt.
I'll leverage as high as I can go.
Okay, so you're going to leverage 10% down.
Let's do 80% though, Erica, because I think that will be applicable to most people if they're not doing a second home loan.
Okay, that works. And then where were you originally thinking you were going to invest before this conversation?
Oh, I had not even considered short-term rentals much.
Okay, so then we're just gonna let this tell you what to do.
Now, should we bump up the interest rate, or is that a realistic interest rate right now?
It's realistic, but also for the sake of in our database, we go from 5 to 10. So if I bump it up, it's going to go to 10.
Oh, okay, gotcha.
Yeah, but we can bump it to 10 if you want to get aggressive with it. So right now we have it at 5. Now, what this is doing is this is backing you into your cash on cash return requirement because most people don't know what their cash on cash return requirement is in translation to cash in their pocket. So we let you tell us, this is how much cash in my pocket. The system knows what your cash on cash return is, and then we find it. So we have a bunch of results for you. So it's looking at I have got anywhere from a 20% cash on cash return up to a 73, to a 56, a 15. I'm going to just throw these in order and go with something that's kind of in the middle. Yeah. So we're going to look at stuff.
A lot of times whenever you look at single families, if you're getting 18% cash on cash, you tend to be in a fairly low end part of town. Is that true with single families as well? Or with short terms?
It depends on where you're buying. So I wouldn't know how to answer that because every market is so different. For example, like Tuskegee, Alabama was one of the markets I discovered through our tool, which is, a college town, drives a ton of traffic there because they have their football team, Auburn, and then they also have 2 different colleges. So anyways, what I noticed there is that you can buy a single family home for like $89,000 to $120,000. Wasn't the greatest home. I'm not sure what kind of neighborhood it was in, but it was definitely something you'd have to come in and fix up. But the returns were so enormous, it was worth it. And then I go to other markets where I'm seeing, similar returns and it's more upscale. So it's so different in every market. We'd have to analyze it on a case-by-case basis.
And this is a starting point, right? This is an area to kind of give you the metrics, and then you actually have to, identify the actual deal and look at the full comprehensive picture with that.
We're telling you what to do to find, we're giving you the deal criteria here in that market that we've identified in that market this many times in each market. So 67 times in Ingleside, Illinois, we identified 2-bedroom single family homes generating with these terms you just gave me, a 65% cash on cash return, right? I can't tell you why. This is why we have to have the best agents in our network to tell you why and to duplicate this. But what we can tell you is that the formula to hit that's been proven is that if you go into that market and you're spending, let me go ahead and find our average listing price. You're spending $90,000 on this 2-bedroom single family home. It's bringing in $134 a night at a 74% occupancy. And it has a pretty high average review score of 5. That's big. And it's driving, a net cash flow of $11,000 in your pocket every year with your $75,000 down. That's after everything. So that's a 65% cash on cash return. I could never, just me as an agent or as a person, ever have discovered this for you. This had to be our tool that did it because it goes through every single individual property and market in the whole country that exists. So that's a starting point. So I would say to you, look, if you want to go to Ingleside, Illinois, and find yourself a home for around $100,000. I mean, heck, at this cash on cash return, you could probably afford to go even higher in price, as long as you can hit this nightly rate of 134 at 74% occupancy and do fairly well there, and keep your reviews up, of course. So it all comes down to how you manage it, your team that you build out there. I mean, that's all a factor as well. So the next one I'm seeing here is, and again, I've never heard of this place, Vive, Indiana, 3-bedroom, single family home, is doing 65% cash on cash return as well, based on the criteria you gave me. It's pulling in $233 a night, and you're picking up those houses for around $200,000. That's also really great. And that one's putting $26,000 a year in your pocket. So this is just like a long list of, I don't know how long we go. There's 44 pages of this, and each page has around 50 results.
Look at one more thing. So this is a great way if someone has kind of general criteria, they're open to a market, that we can actually identify a handful of markets that might be interesting to them based on a handful of criteria. Again, this is a starting point with data. You have to obviously identify the property itself, and work with the local teams that Erica has vetted. But I mean, this could be a very valuable tool and a strategic way to go about building a short-term portfolio. One thing that surprised me was looking at some of the areas that we already invest in consistently, is that those are actually good markets that may have short-term potential as well to increase income from what a long-term rental would be. So I know that we've had some people that have elected to do that with the turnkey properties that we sell, is just turn them into short-term rentals. Now, again, a little bit more on the managerial side. You need to have good management set up to handle short-term. You have to furnish the house, but higher income potential. And I love the idea of being in an area where you have both options, long or short-term rentals. I think it's just a really sustainable way to build a business model, in a unique way that you can maybe carve out some of those as short-term rentals. But the data is essential. Let's actually go a different approach here, where we look up a local market that we know we're interested in and look at the data specifically for that market. So, sure. Adam, what area were you talking about close to you?
Fredericksburg, Texas. ER.
Oh, sorry. Yeah. Sometimes, no, it's my system. It's doesn't like this city.
I'm not sure if Fredericksburg exists.
It might not. I don't think it's in here. Is there like a bigger town closer to it that maybe it's kind of getting lumped under?
No, there's nothing around it.
Oh, I found it. No, I found it. Fredericksburg, Texas. Are we looking at single family, condo, or townhouse?
Most of them are single families.
Okay.
They're cottages.
Okay, let's see what it's doing. I'm curious. I find so many new markets just doing things like this with different people, like digging into data, because it's impossible to see every market out there. All right. So Fredericksburg, our cap rates are not high here. So I don't know what, they're doing in terms of like the outliers or the top 20%, but we've got lower cap rates in this market. That doesn't mean that there's not high performing ones on there. We'll go look at the scatter plot and see the outliers. But I'm seeing here that there's a pretty even spread of inventory between 1, 2, and 3 bedrooms. And then it drops down pretty low after that. So there's not a big demand for bigger houses here. It's like you said, cottages. So let's see why these are coming in so low right now. Occupancy is low. So that could, except for on the 7-bedroom, which there's not a ton of data on that, occupancy is super low in this market. So it could be very possible that they're bringing in a decent nightly rate, because the 5-bedrooms,
summer town.
Yeah, the 5 bedrooms bringing in around $400 a night, and the price to pick it up is that's the numbers. So this is not cheap either to buy here. So the rates are lower compared to the prices. And I'm looking on the scatter plot. I mean, it's a pretty even distribution. So I mean, can I just, without offending you, say that I don't see this as a great market to invest in based on the data? Based on the data, I probably wouldn't go here, because even the top performers are coming in around a 4%. But this could be one of those markets where it's like you just go there because you live nearby 2 hours away and it covers its own expenses. And it could also be that it had a surge in pricing in the last couple of years and it used to be a good investment and now prices have like priced it out, right?
And we know with short-term rentals too, is as much as statistical information is vitally important, especially if you don't know where to start, it all comes down to the unique experience that you're creating and the managerial experience to it. I mean, we've seen short-term rentals vary dramatically, like into the six figures of rental income, just based on how you're marketing it and how it's being used. So there's a lot of fine touches here I love that that's also part of the opportunity with short-term rentals too. But if you need a starting point, if you're looking to, evaluate a market, break into a new market, if you just have some general criteria and need some guidance, I think this is just paramount in terms of giving you data points. So Erica, can you talk a little bit more about, let's say someone is interested, they're interested in a specific market, or they're interested to start investing in short term, and they kind of need a starting point, giving some guidance on like where to look. What does a client process look like for someone working with you?
Yeah, so we usually work with two different types of investors. One is the person that knows exactly what they want and where they want to go. And what we usually do with them is we invite them on a group call for that specific market, where we do what we're doing now and we dig into the data. Or they can just skip it, bypass that, and we connect them straight to our agent team there and supply the agent and the investor with the data report so they can run from there. Because still, even if you know the market, you still want to know in that market what the saturation is of each bedroom size, how they're each performing, what the top performers are doing. You need a strategy, even if you know the market. So you still need the data. If you don't know the market, we do what's called Ask Me Anything calls. And then we also 3 days a week have these live calls where we feature 3 different markets where we go into the data. But on those calls, we have the real estate experts from those markets with us on the call. So we go into the data, but they help shed light on why the data looks like this. And they can give you ideas on how to do better and the secrets that are, that they know that are going on in that market. So those are really great calls. But those are if you already know where you want to invest or you want to explore different ideas on markets. So I suggest people to either join the Ask Me Anything call, where we just go into random markets like this, take requests and learn and try to find the best place for them. Or join one of our preset calls that already has a market. And either way, you'll get connected to one of our expert teams on the ground, and you'll walk away with really valuable data. Our tool it's not user facing. So that's the only way to get access to it.
Yeah, at the very least, you'll learn something, right? I mean, that's what I always want to mention, that it's all about education and, refining your criteria. So this is just tremendous, super fascinating. You're giving out a lot of information. I know that you have some. Well, let me ask you this. Is there any cost to someone that wants to connect with you guys?
No. Our costs,
fees, ongoing costs?
Nope. Our fees, our client is actually the real estate agents, and they're the ones that pay for our data. The benefit to the investors is they don't have to pay for the data because our agents are the ones that are getting that tool. So we can offer things like this to the investors. A lot of people don't want to pay for mediocre data right now that's kind of out there in the industry. So this is a great opportunity for them to, without cost out of their pocket, really dig into some markets.
I love it. And you have some special things that you're going above and beyond for our community, which of course we appreciate. But being a part of the rent to retirement community, you're able to get some more market specific information. Can you talk about what you're giving away to the rent to retirement community? Yeah,
I've got a really cool tool here that we didn't look at. It's called market comparison. And what we do is we say, this is the minimum cap rate that I want to even pay attention to. I don't care about anything under this. So 12 cap. And we look at everywhere in the country that's producing at least a 12 cap. And this is going to, and under a certain price point. So what we're going to do is we're going to pull a report for everybody on the rent to retirement call that's listening, under $300,000, where you can do at least a 14 cap in the whole country. And we're going to print the top 20 out, or we're going to send the top 20 as a free report to you. And it's going to have all the details that we looked at on our market match. So it's going to tell you property type, whether it's a midterm, short-term, or long-term stay, cap rate, everything. And we don't do that for anybody, but we are doing it for you guys. So that's usually only accessible on a live call.
I love it. Thank you so much. That's super important to us and just fascinating information. So anyone that wants to get access to this information, go to renttoretirement.com/find STR, FIND STR, and Erica will provide this report for you at no cost, as well as all the other benefits that she's making available. So that's outstanding. This has just been exceptional, and we love the data. Erica, thank you so much.
Thanks so much for having me on. I love talking about data, so it's been fun.
Well, thank you so much for joining us again. That's renttoretirement.com/find STR. We really appreciate you spending your time with us. Everybody else, you can head over to renttoretirement.com and see what we have available. We do have short terms available on the site. you might want to check and make sure it's a great market to invest in if you get your report there. But that's at renttoretirement.com. If you have any questions for Erica or for Zach or myself, send an email to podcast@renttoretirement.com. That's podcast@renttoretirement.com. Don't forget to leave us a review on whatever podcast platform you listen on, and we'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.